our, our respected Associate Professor Dr. Khurshid binti Muhammad, Deputy Dean Development, Dr. Ali Khurshid, ladies and gentlemen. Assalamualaikum and a very good morning to all. I'm Izzat Zain, a fellow student of IBS, who to wish you a warm welcome to all to this morning lecture. I'm so pleased to be with you this morning to have the chance to introduce our esteemed guest speaker today, Dr. Ali Khurshid. Dr. Ali Khurshid has been involved with Islamic financial institutions for over 2 decades and has comprehensive skills in knowledge of Islamic finance. He started his career in international marketing and trade, and he is a recognized expert on Shari'ah compliant finance within the Islamic law, Islamic muamalat, and Islamic contracts. He also has extensive consultancy experience in the Department of Islamic Finance at Elite Horizon Economic Consultancy. Most of it focus on economics, finance, Islamic capital market products, alternative finance, structuring, endorsing and advising on Shari'ah compliant products with particular experience in capital and stock market products. Dr. Khurshid has a PhD in Islamic Studies and Economics from the University of Leeds, UK, and he studied Fiqh and Shari'ah at Al-Azhar University, Egypt, and has a master's degree in Management, UK. He also has several publications in Islamic insurance, Islamic wealth management, and Islamic finance. And Dr. Khurshid is a trustee member of Academy UK and member of Institute of Management Consultancy in UK, a visiting fellow in ICMA Henley's Business School, University of Reading, UK, and a former visiting lecturer at Al-Azhar University, Egypt. Still present, I'm sorry. He's still a lecturer there. Okay, Dr. Khurshid was nominated for King Faisal International Prize in 2006 and also nominated for the Mubarak Prize on Islamic Studies in 2010. He is a regular speaker on Islamic finance issues at conference and on TV. Finally, he's a fascinating person and we are all here for a treat today. Without further ado, please join me in welcoming Dr. Ali Khurshid.
Bismillahirrahmanirrahim. Salatu wassalamu ala ashrafil khalq, Sayyidina Muhammad sallallahu alayhi wa sallam. أحييكم بتحية الإسلام. السلام عليكم ورحمة الله وبركاته.
This.
I have to hand it my hand.
Thank you. Good morning again. Our lecture today, it's really to give you an idea of Islamic finance. And we chose the title, Why Islamic Finance? It's because most people, although we are Muslims, but most people do not understand the depth and the importance of Islamic finance. I don't think it's...
Is that better? Yeah. Yes, as I said, it's most people know about Islamic finance, but don't understand quite in depth the principle and the reason for Islamic finance. Most scholars and most commercial institutions, they label Islamic finance to religion, to Islam. It is true and it's not true. Because it is extracted its principle and ethics from Islam. And as you know, Islam is a religion for everyone, not just for Muslims. The Quran came to Prophet Muhammad sallallahu alaihi wasallam for the people, not for Muslims, because at the time there was no Muslims. When people become Muslims, they become give the shahada to that La ilaha illallah, which is God is the only one, and Prophet Muhammad, one of his messengers, not the only messengers. So Prophet Muhammad came to the whole people, to everybody. When we label Islamic finance to Islam, we're only going to say it takes the good ethics of the Islam. But if you come to money, money is different. Money is everybody. And God does not give the Muslim people to become the richer and the rest of the world to be, or the rest of the people to become poorer. The money is a competition between all human race to make money or to gain money or to use money or to donate money. And we are, as a human being, only as agents for God or for Allah to distribute this money. So a human being, unfortunately, we are greedy. We like money. Therefore, the dividing of the money between people is the one which is not taking a fair action. So if Allah gave me a lot of money, which I don't have, I'm glad to have that. If Allah gave me a lot of money, He doesn't give it to me. He gives it to me to spread it. It's not to take it out in the street and spread it, but it's actually to use the money to create wealth, to create jobs, to create life for other people. And that is the role of everybody. So the person who Allah gave him a lot of money, he have more responsibility than the person does not have a lot of money. But the person does not have a lot of money have another responsibility. So every one of us in this world, in this creation, has got a role to play. The rich person have a role to play to how to spread the money and get people to make life to themselves and jobs and all that. And those who give them something else, they also give them responsibility to spread that, what the gift or what the responsibility God gave you. For example, we are academics who have responsibility to spread the education, the knowledge to other people. If we have that knowledge and don't spread it to other people, so we're actually not doing the role Allah gave us to do. That's exactly the same with the money. So what I'm going to do today, I'm going to say or to explain how Islamic finance, is it an economic system or a religious system? So we have to separate the two together and see what the relationships between them. Let's look at what the economic system. Economic system consists of production, trade, consumption of goods and services. The economic agent can be individual, business, or government. The economic agent means who will actually spread or separate or distribute the goods. The transaction occurs when two or more parties agree to the value or a price of transacted goods or services in an agreed currency. One will cultivate grains and take the grains and sell it to somebody else, and that is generate a transaction. And that is how the world economy works. The currency or money is a medium of exchange. In fact, the money was created nearly 2000 BC by the ancient Egyptian people. Is to create, because before that, with the barter, by goods for goods, and that was created properly. So the money, which is at the time, I think, when they digged it in, they found like a stone coins, was and some kind of agreed value is created to exchange goods. Market-based economy, where goods and services are exchanged freely without interference according to the demand and supply by barter or money. So the market economy is the one which allows people to buy and sell and trade different goods. If any of you remember Adam Smith, the father of the economist, that's what he named for. defined the economy as a product offered at a national price generated by the use of competition. Therefore, you cannot really put a price on the goods before the supply and demand. The demand and supply will set the price. While the government should only regulate for abuse and control monopoly, which is very interesting because Adam Smith came around the time after Ibn Taymiyyah by about 150 years. And Ibn Taymiyyah was the one who actually wrote about mu'amalat and wrote about how to deal with the money. And if you're going back to Prophet Muhammad time, sallallahu alayhi wasallam, when he immigrated to Medina, the goods, as you know, it used to be shipped to Medina through convoy of traders, and the convoy of traders at that time came from El Sham, which is Syria at the time. And the convoy, the trader of the convoy have certain goods which they put the price high than normal. People went to Prophet Muhammad and say, we cannot afford the prices. So he said, go and try again. They came to him second time. He also said, go and try again. They came to him third time, asking him to put seal to the price. And he said, no, go and try again. And he did not put a seal for a price. Why? Because he wanted the open economy. He doesn't want to regulate prices where the traders will find it not profitable, so they'll bring it. So you solve a problem by other problem. But he did something very clever. Not many people know about that. Khalifa Osman ibn Affan was sitting with him, and he whispered in his ears, he said, can you do something about it? So Khalifa Osman ibn Affan went to the market, he bought all the goods which had a high price, and he sold it into the market with the low price. What that mean? When Ibn Taymiyyah recorded that incident, and Adam Smith took it from there, it means the government, which is Prophet Muhammad was, the governor at the time, controlled the monopoly, because that traders was monopolizing the goods and putting the price they wanted to. So he controlled the monopoly by doing whatever tools required to bring down the price to be affordable to the people. And that is the role of the government. Not the role of the government is to put a seal or a price for the goods. So even the best economist or the father of economists extracted their theory and their knowledge back into Islam. And just that to show you that how Islam was spread around, but people don't recognize it as Islam. They just, look at the good area and use it. Economic activities are measured by the GDP, consumption spending, exchange rate, stock market, national debt, inflation rate, balance of trade, unemployment, and interest. This is what is our recent economic activities set up, the GDP. So this gives us an idea of how the world economy, in a very simple format, without going into details of any of them. Obviously, if we take our time, then we will go to each one of them and see how that built up. So, let's look at religion. Religion is an organized collection of beliefs, faith, culture, system, ethic, morality, and way of life. And the last one is good, something important about it. We are Muslim from different parts of the world. The way of life for Muslims in Malaysia can be slightly different from the way of life for Muslims living in Indonesia. Slightly different from people in Singapore. Slightly different from the people in England, like what we are, where I come from. Slightly different from people from Egypt. But the basic is Islam. And that is what makes the religion become global. So we are Muslim, we pray the same, but maybe when pray Jum'ah slightly different, maybe when you pray, when you fast Ramadan slightly different, but the principles are the same. And that is what made the Islam is a global religion, not just a local religion. Almost all religion in the world believe in God, whether it is a holy book religion like Islam, Christianity, Judaism, or the man-made one, which is Hinduism, Buddhism, and so on. All of them believe in God. Even the ones, those who do not or admit or say we don't believe in God. If you really take them and have a good discussion with them and find out what they believe in, they go around circle, but in the end they believe in something, which is maybe there is no God. So when you go and ask them how they were created, why do you live and die, why all this, then they say there's something behind it, but they don't want to admit it, the word God. But in fact, you find in the end they believe in God. The Global Center, and that will show you in the next slide, the Global Center in 2012 report that 59% of the world population, of 6.9 billion, are religious. 2 billion, which is about 31% Christians. 1.7 billion, which is 23%, are Muslims. 13.8, and I intentionally brought that in, 13.8 million, not billion, million, which is 0.2% are Jewish. And unfortunately, this 0.2% control the world economy. So, a reality. 41% non-religious. What we mean by non-religious, they don't practice any of this. So they just wake up in the morning and go to sleep, and their life, when they ask them about God, they know about God, but they don't actually practice any of the religion. Religion and business have throughout the history integrated and affected one another, as well as influenced social culture. Political and labor laws, for example, in the UK, labor law, as well as in the USA, prohibit to discriminate against religion. So, the religion is most westernized country have separated religion from politics, from economy. I leave it to you to think, is that a good idea or a bad idea? Maybe you'll make up your mind in the end of the lecture. To me, personally, religion is a close relationship between me and my Allah. I can ask Him for guidance, forgiveness, but that's between me and Him. Has nothing to do between me and you. What's between me and you, how I treat you, or how you treat me. I can be very good, praying, going to Hajj, doing everything I can, but at the same time, I'm talking about you in your back, swearing at you in your front, stealing from your pocket when you're praying, cheating, anything, but does that make me a good person? No. Because one day, there is somebody there going to ask me, what did I do with you? So if I did something bad with you, then I got to repay you back. If I stole something from you, I got to repay you back. At that time, unfortunately, there is no more money making, or I can't exchange those currency. So what will Allah say? Well, look, you swear at Mr. So-and-so, and therefore you owe him 100 deed. And I take from my good deeds, which could be 120, and I take 100 and I give it to you. You build up your deed. But what happens if I don't have the 100 deed? I take some sins from you. So your sins will drop, your deed will grow. And that is how Prophet Muhammad said to somebody who is the bankrupted. He says the bankrupted person, the one who swore at that one, the one who cheated that one, the one who did that bad thing. But when he comes the day of judgment, he gives that one some of his good deeds, that one some of his good deeds. When he runs out, he takes someone of bad deeds and someone of bad deeds. But although he was praying, he was doing Hajj, he was doing zakah, he was doing everything Islam said. But that is a bankrupt person. And I hope we are not one of them. Now the question here is, can economy and religion mix? The practice of religion is between the person and his God in form of prayer, meditation, and in a daily life such as marriage, funerary service, public service, and charities. But the economic system are man-made system to regulate and reform trade. So that is in one line, and that's the other parallel line. Through history, economic systems have been a form of trying and testing of what to produce, how to produce it, who get what is produced. So that is how the economy works. And that's why you found the country may be richer than the other, because they produce more than what they consume, and they know how to produce better, so they produce more, and then they sell it to whoever they like and they get the best price for it. Efficiency, growth, liberty, and equality are objectives to be achieved in a good economic system. So if you want to be producing country in a good economic system, you have to apply certain aspects: efficiency, growth, liberty, and equality to achieve that system. In a capitalist economic system, production carried out to maximize profit. And that is the basis for capitalist system, is to maximize profit. And I just put few lines under this word again, to maximize profit. While socialist system, which is operated and run by the Eastern Bloc, which is Russia and its country, which did not work very well, are concerned with the jobs. And the priority and for the profit comes second. But the priority first is come for creating or giving jobs to the people. And that's why they become unproductive. Because the job giving for life and not challenge against their output. And their profit come next. That's why the communist system did not last. Because you do need to have the human element in production. The human God created to produce, to create, not to be like a machine tool. And here we come. The number of Muslims, as I mentioned to you in the previous slide, there are 1.7 billion Muslims in the world, which is 23% of the total world population, with the annual growth of 15%. And expected in the year 2020, Muslim population will exceed 25% of the world population, making it second largest religion after Christianity. Only 20% of those who live in the Arab countries. So the 20% of the Muslim around the globe are Arabic speaking. So that is one of the miracles of the Islam and one of the miracles of the Quran. You are not in Malaysia here Arabic speaking by base, but you know good Quran, you know good Hadith, you're able to pronounce the right words, and that is a miracle of the Quran, not the other way around. And just to have a spread of the globe, how the Islam spread around the world, which is showing you in the put my glass in there. The light blue, which is the Muslim countries with high population of Muslims. If you come down to Malaysia, and in Indonesia, I found it darker blue. which is about 66 to 85% of the population in this part. It's quite close to the lighter dark blue, which is 36 to 65%, and that's it in the with Malaysia, Singapore, and Indonesia. Now, Islamic finance have been obviously developed for some time now, and that is what we are witnessing now. Islamic finance is the fastest growing segment of the global financial service industry. I just remind you back with the previous slide when I was saying the difference between capitalist system and economic system, because that will have something to do with the growth of Islamic finance. Market of Sharia compliant asset estimated to be at 1.2 trillion USD dollars, and that is estimated last year. Sharia compliant finance assets have been growing at a rate of 20 to 25% over the last 10 years. So when although it is a small, but the amount of growth is big. It's quite big. The global Islamic finance industry estimated at 1.8 trillion USD dollar. That was the year 2012. That represents only 1.2% of the global financial system become Islamic finance. And that is since when? Then only about 10 years. So if you go with any system and taking that even that 1.2% of the global financial system for Islamic finance in 10 years, that is a very big achievement. Although it looks that, but there are banks like China Construction Bank, for instance, hold assets worth 2.6 trillion USD dollars. So it's big, but still small. If you're looking at the US financial system, obviously, I fear to bring the figures. And going back to earlier, the population of the Jewish, that's why I brought it in especially, is 1.2% of the world population control 80% of the world economy, which is unbelievable. Global Islamic banking asset with a commercial bank reached 1.6 trillion in the year 2013. In the year 2011, it was 1.3 trillion. So it reached 0.3% or 0.3 trillion USD dollars in 2 years. And that shows you the growth of Islamic finance within the last 2 years, representing an average annual growth of 17%. Islamic banking growth by 50% faster than overall banking sector. What does that mean? The number of conventional banks increased. The number of Islamic banks increased 50% higher than the average conventional banking system. In Saudi Arabia market share of Islamic banking asset is now over 50%. The top 20 Islamic banks make up to 55% of the total Islamic banking assets and are concentrated in 7 countries, including Malaysia. So Malaysia is one of the main countries with the number of Islamic banks are increased. Demand for Sukuk instruments will continue to grow, outplacing global supply and providing opportunities for banks to establish and grow their Islamic fixed income platform. I know it is very difficult to understand some of these economic figures, but I'm only trying to explain how the Islamic finance has been growing over the last 10 years. The basis, what makes the Islamic finance grow that fast and acceptable globally? There are a few core principles essential in functioning Islamic financial system. The first one is riba. I'm sure everybody knows that. Everybody knows the riba, but they don't know how to apply the riba in the world economic system. And that's what I hope to try to explain shortly. Riba is one of the prohibitions in the Quran and Sunnah. Gharar, which is deception, also prohibited because it's associated with the riba and gambling and dishonesty. Now, the next one is very important when we talk about global economic competition between Islamic finance and non-Islamic finance, or the global financial system, which is risk sharing. Almost all Islamic finance tools apply risk sharing. If I take the two phrases out, or the two functioning out, the riba and gharar, out of these four, and just concentrate on risk sharing, it will put Islamic finance ahead of the global financial system. And that is one thing when we discuss economic principle with a specialized economist. I started to talk about the advantage of Islamic finance comparing to the conventional finance. I only talk about risk sharing and compare risk management and risk assessment with the risk assessment and risk sharing with the global financial system. And it's very simple, because if you're taking the comparison one by one to specialists and tell them how the Islamic finance apply the risk sharing, they find, oh, wait a minute, we never thought about that. And when you look at how the capitalist system, and now I'll go back a bit, how the capitalist system reached what they reach. Remember when I said on the slide, they rely on maximizing profit. So therefore, they hire people, if it's manufacturing, for instance, they hire people, and they're trying to maximize the output they produce. Therefore, they maximize profit. And what happens when a manufacturer, for instance, produces any kind of goods which is in a great demand? They will set their prices. If there is no competition, then it becomes like monopoly. But they set the price. And what happened with the capitalist system? When a specific goods, the manufacturers of the similar goods, they will agree between themselves to set the price. So although there are more than one, but they're actually monopolizing that particular sector. I'll give you an example. An armament. Can anybody go and buy a tank from America unless, first of all, get permission, any country get permission for the American to supply the tank? Secondly, there are only 2 or 3 companies that can supply the tanks with different specifications. And the 2 or 3 will set the price, so they will milk any country who wants to buy these tanks. So this is a monopoly. Airplanes, ships, all these big infrastructure, power station, electric generators, all these big important goods you need to run a country, it's all monopolized. And that's what I say, 0.2% of the world population, which is the Jewish, are operate and own the world economy. They make you, for instance, the American create a war zone somewhere where the 2 parties have to buy tanks, have to buy armor, and they go and buy it from them. They set the price, so what they do, they take the output of this country to buy goods, which is really don't need it if the 2 countries or 2 parties make a peace. But that is what they do. That's why the world economy is concentrated on 1 or 2 monopolized areas. Money is a medium of exchange. It's a purpose to determine the value of goods or services. And this is the basis of Islamic finance. So remember, the basis of Islamic finance are 4, no more. One of them is very important to the average economist, or they understand the economy, which is the risk sharing. The other 2 prohibition, which is riba and gharar, and using the money as a medium of value, which is in verse of most of the capitalist system. Islamic finance asset must back all financial transactions. And this is something which is when you talk about capital market products, which is have been trading and making profit and generating profit from selling and buying debt. Islamic finance does not approve of buying or selling debt for many reasons. The explanation that take long time, but in the same time, Islamic finance transaction always rely on transferring assets, and asset being money, which is money as we agreed that money is give a value, asset being land, properties, machinery, tie can be an asset, suit can be an asset, but something worth value. But most of the global economy work on selling debt or balance sheet. So therefore, saying, for instance, I buy a stock of a company X, and the company X, their stock may be producing 10 units, but the selling stock worth 2,000 units. So you are not actually buying asset, you're buying debt. If this company go bankrupt, you have nothing left. And that's what makes Islamic transactions are more secure than any other transaction, because you have to exchange asset. If you're selling oil, then you exchange asset, which is goods, and you take money instead. But you don't buy oil have not yet produced. You buy the goods which is already have a position of. You might deliver it later. There is obviously several tools in Islamic finance. I come to that in a minute. But there is several ways of buying and selling future stuff, which is have a certain aspects, but not selling them. Islamic finance prohibits gharar, which is what's the gharar? Gharar in a simple format is uncertainty, or buying or selling something I don't owe. You have a nice, lovely car, and the gentleman here wants to buy it. The person should sell it is the owner of the car, not me. But in non-Islamic system, I can sell the car, which is not mine, and I can take a transaction for that. Islamic finance does not approve of selling what you don't own. There is two areas where you can buy and sell what you haven't got a possession of, which is I explain it in a minute, but basically you cannot sell what you don't have or able to deliver. And that is something which is made Islamic finance superior system than any other system. During the financial transaction, contracting parties should have knowledge of the goods received and or the price paid before entering into the contract, which again is very important. The transaction have to be clear, and the goods have to be identified, what it looks, what it's going to be, and so on. In Islamic finance, the financial contract should have specific terms relating to the sale, price, the price, delivery, quantity, quality, existence, etc. Without this, the contract can be void and null. Contracts should be transparent. What it means transparent? That means average person can understand it. It doesn't have to have what you call it a hidden clauses. And when you come and look at the contract, you look at it and say, oh my God, I didn't know that. It's exactly what's happening with the insurance contract. Have you ever examined an insurance contract? Usually they have what you call it a hidden clauses, which is give the insurance company all the right not to pay when you make a claim, but they have all the right to collect the premium. And that is what insurance basically is all about. That's why when we look at the kafil is slightly different. We treat this issue of the contract. The other thing is, have you ever looked at, do you have a credit card? Most of you have, not me. But have you looked at the terms and conditions of the credit card? They're always small reading. Have a look at it. And if you are like me, sensible, maybe, you will never use a credit card. Have a look at it. Don't just take my word. Have a look at the terms and say to yourself, is that I can live with this? And what happened was they give you the terms and you sign, you take the credit card. A few months later, they send you an email or letter, say, we changed our terms and conditions. Have they consulted you to change the terms and conditions? Have they given you the opportunity to change yourself the terms and conditions with the credit card? They didn't. And that is what I'm trying to say. We're working with a system that does not look at the transparency, they don't look at the value and the importance of the other party. The Islamic system and Islam had prohibit some of the transactions. They prohibit riba, I just explained that, prohibit gharar, just going to the left, prohibit gambling, prohibit money trading. So money is a medium, not money as a commodity. It's prohibit unlawful, unethical trade, such as alcohol, pornography, things like that. That is the unlawful trade. Prohibit unfair and unjust contracts. And I just, give you an example of a credit card contract. So when you look at Islamic finance, it will prohibit that type of contract which is not transparent, which is unfair and unjust between the two parties, and so on. Prohibit monopoly, we explained that earlier. Prohibit short sale. Short sale is selling the future. Selling something to be delivered in the future, but you don't have any control of it. Like, for instance, the commodity market work on the future. What happened basically in the commodity market is they say, okay, I want to buy 5 tons of wheat. We are in February now, delivery October. Where is it come from? Come from China. Okay, have you had a sample? No. And what happened, the commodity broker will pay the grower a small percentage, like 5% or a maximum 10%, to secure the number of tons he's selling, say 200 tons. And he take the 200 tons and sell it on as he delivered it, as he got it, and make a profit. And then in time come, he pay the grower the contract. But in fact, what he sold something he doesn't owe and something in the future. So what happened if the famine or no rain or whatever came to the crop and unable to deliver? Who is the loser? It's not the bank, it's not the broker, it's the people who bought the contracts on. And that is the short sale. We have similar contract in Islamic, which is called a salam contract, which is, I'll explain it in a minute, it's coming in the next one. Sharia compliant product, it is any contract with the Sharia compliant, it must be that exchangeable for money. The contract is, you can buy and sell value, not barter something against something else. You can sell 6 eggs with a piece of bread. The 6 eggs had to have a value in money, and the piece of bread will have another value of the money. So you can have the money, and then you buy 6 eggs with the money, and you buy a loaf of bread with the money. And I'm sure the value will not be equally the same. And the Sharia compliant product that is not prohibited in Islam, which is as explained in the previous one. The goods are not traded under duress, which is very important, so I don't force you to buy this. I don't go into your house and force you to sell me your house because I have to marry your daughter. Something like that. Duress is something which is put a pressure on do something else. And products that are free from riba. Products that are traded in the open market, which is important if you have a house to sell and you cannot sell it in the open market, so it's not a Sharia compliant trade or sale. So if nobody else can buy that house, or nobody else can buy that car, or nobody else can buy this product, that means it's not a Sharia compliant contract. And products that are not monopolized by one party. And that is really summarized the previous slide. That is the Islamic finance in short, that prohibits riba, prohibit gharar, prohibit unethical products, but also a product that have to have element of risk sharing, and money is a medium of transaction and investment in the form of share of assets of a market value and a profit sharing. I just want to come to the Islamic finance contract tools. You obviously heard of some of them, but not all of them. When you look at the contracts and you look at the tools, we call it tools or Islamic finance contracts, or the products which is Islamic banks are using or Islamic finance houses are using. We start from the top, top and clockwise. Musharaka, Mudaraba, Murabaha. You must have heard of them. Musharaka, Mudaraba, Murabaha. We call them the 3M, which is Musharaka, Mudaraba, Murabaha. In very short, Musharaka is a partnership arrangement, same as Mudaraba, same as Murabaha, but every one of them has got different contract terminology and different needs and different application. Then you have Ijara contract and Ijara wa Iqtina. Ijara, which is renting the asset. So, for instance, someone buy or build a block of flat, and rather than selling the property, the individual flats, he will rent it, and that is what Ijara. And you can always have a contract where you rent the asset for a certain period, and in the end of the period you own it, and that is reflect on the price which is you own. Salam contract, which is the contract which is you buy for future delivery, but this is different from short sale. Short sale, basically the buyer or the broker put very small percentage, like 5% and maximum 10% of the value of the crop if delivered. But in a salam contract, you put the full price in advance. So I want to buy from you, you are a grower of wheat, for instance, or a cocoa or whatever. I buy 10 tons because I use it for manufacturing, or I use it for my own consumption, whatever. And I buy the ton and I give you the money at the time of the contract. And you promise me to deliver at a certain period, deliver to me in my place. Normally, these contracts are not done by amateur, it's all professional traders. So for instance, someone will buy 20 million barrels of oil from Saudi Arabia, just giving an example. So know that Saudi Arabia produces a day maybe 20 million barrels. But they're buying 20 million barrels for delivery months of September. So Saudi Arabia produces 100 times more than what I'm buying. And that is considered to be salam contract. So I buy for future delivery. But when I buy the contract today, which is maybe 5-6 months ahead, the price of the barrel will be different than the spot price of the barrel. So it will be a lot less. So it gives me an advantage of the price and gives the supplier advantage of getting the money in advance. So we need the money for development, we need money for do something else, we need the money for buy ships, whatever. So it gives the two parties the advantage. Obviously, when you look at this, between the time I buy the contract and the time of delivery, this is the money. If you give me $1 billion in 2 months, I will invest it and I make a profit. So definitely, if I buy it now ahead, it will be the price in my advantage, a better advantage than if I buy it on spot. And that is, if you remember, when we go back to the sanctions and all that, when the first time they had a sanction against Iraq for a while in their oil, what forced Iraqi to do is to sell their oil on spot. And the American was foolish, because they put sanction on the oil, and what the Iraqi did, they sold it for more price than what they can get. They don't sell it in advance because they boycott, but they sold it in a spot, and the spot price was higher than that. Not only that, they demanded the money in cash. Not only that, they demanded money in non-USD dollar currency. So the American tried to put the pressure on Iraq, and Iraq found it even better, and they took advantage of that. That's not a contract, it's something which is you contract the manufacturer to manufacture something to deliver later. Mainly it's used for big equipment like airplane, ships, power station, etc., which is expensive to manufacture. It's not something like somebody producing a motor car and put it in the showroom and go and buy it. It has to be manufactured specially. And the contract of that is take several stages. During the time of contract, you buy something, you pay some part, stage of development you pay some more, and so on. And that type of contract is a very specialized one, because what you do is you, for instance, the stock of the components of manufacturing, it's owned by the buyer, it's not owned by the seller. So for instance, making a ship, you're going to buy 20 tons of steel. The steel will belong to the buyer, not belong to the manufacturer. It has got a different terminology and different terms of the contract, which is make the contract between the two parties fair. Just in case the manufacturer, for instance, go bankrupt, so the buyer has some asset to sell back. And the contracts are carried on. There is a sukuk, which is, you heard of that, and a sukuk is similar to bonds, but it has a value of underlying asset. A sukuk normally used for development projects. If you, for instance, want to build a hotel worth 100 million, and you don't have that much money, so you go into different contracts. You can go in a Shari'ah contract, which is you have a partnership arrangement. But partnership come and say, well, look, it's 100 million, no, I only can afford 20 million. So that's good, that's 20 million. Then you go to the bank and say, well, can you come partnership with me? He said, yes, I can, but I don't want it to come as a full partnership. I will come as a mudarib. And he will put another 20 million. And mudarib is slightly different than musharaka in the terms of a contract, who gets his money and so on. And then you go to somebody else and say, can you come with me? He said, no, yeah, I like the idea. I will put another 20 million, but I only can come as murabah, because the murabaha contract suit him better. When we go and specify the contracts, everyone will explain in detail. And then you're stuck with 60 million and you haven't got 40 million still. And what you do is you say, okay, I'm going to have another contract which is called sukuk. So you issue sukuk for 40 million remaining ringgit, and the sukuk is similar to a fixed term borrowing from the sukuk certificate holder, and the sukuk certificate holder is a 40 million, you can issue 40 million sukuk. And every one of the certificate holder, every one sukuk can be bought by one person. He is not really big investor. He's working class like ourselves, and he got maybe 200 ringgit to spare. So he go and buy 200 sukuk. And what the advantage of sukuk to the sukuk holder? Very simple. That is, during the period of the sukuk, it give him an income. Give him a ringgit a month, or a ringgit every 3 months. It depends on how the sukuk is. And in the end of 5 years or 6 years or 7 years where the sukuk redemption is going to be, the manufacturer, which is assuming me setting up the hotel, I had to buy back all the sukuk, the 40 million sukuk, and pay for it in one go. And therefore, the sukuk certificate holder, or sukuk owner, he put investment, he said, well, I got 200 ringgit to invest, or 200,000 ringgit to invest. I will get an income through the 8 years, and in the 8th year, I will get my 200,000 ringgit back in one lump sum. At which time you calculate, you say, well, okay, I got a child, he's 12 now, 8 years he'll be 20, you need to get married, you need to buy a house, and that 200,000 will be useful for him. So it's some form of investment, giving you an income, but at the same time, it gives you a lump sum at the end of the period. And that is the advantage of sukuk. That is to the sukuk holder, certificate holder. But what is the advantage to the developer, who will the one issued sukuk? That is, he cannot get funds from somewhere else. So he spread the borrowing or spread the partnership arrangement into a good number of people. But he worked out in his business plan that definitely